weekly Tesla chart does show the 351.39 to 353.69 area, combination rising 2-year channel top, and the 50% upside retracement from the December high against that more recent April low. This is an area we topped out at about a month ago. We spent a couple of weeks testing it. We even settled above it on a daily basis, but it is a weekly settlement on the longer term charts that is the key, the final linchpin in determining longer term market moves. And had we closed the week above 353.69, we would have anticipated 516.05 as a long-term, possibly by the end of the year objective. But until then, having tested the low 350s, a rising 3-month channel bottom, now at 296.95, would be considered a 2 to 3 week target. That happened really in about 3 to 5 days of testing that area, helped along in part by the Musk-Trump feud that occurred. We bottomed out at the channel bottom 296.95, tested it twice in a week, and then continued up really to the 5/8 Fibonacci that is still there at 331.61. 331.61 can contain daily buying pressures, and in terms of the 3 to 5 day time horizon, we don't expect the low 350s unless we can close above 331.61. Until then, you could consider playing the short side at 331.61 down to 296.95, and that still remains the reality here. There is today a descending channel bottom at 308.36, well suited for day traders. Holding below 331.61, we could bottom out there intraday, possibly for the day. And certainly if we were to close today below 308.36, 296.95, likely within just another day or two, 296.95 can absorb selling through next week. And from here, we can round up again within 2 to 3 weeks into the low 350s. We could continue to fill this wedge out into later July, perhaps. But if we close below 296.95, and that is not going to happen today, I do see the setup longer term for this 159.95 to 166.05 area as like a 2 to 3 month target. I don't think there's any compelling reason to be long if we close below 296.95. The question is whether you should reverse and go short immediately, presuming that you bottom pick 296.95 and maybe you got a slight bounce, but you didn't reach your objective, and then a few days later we close below this structure. You would want to exit that long position. But the question is, should you reverse and play the short side? And I think you can. I think that's a valid approach. Others would wait for the next decent sell signal confirmation. So in other words, you could be long, bottom picking the mid 290s. We violate 296.95. You're out of your long position. When should you go short? Perhaps it could be below 272.87. And that sort of clarifies a 2 to 3 week sell signal down to 221.86. Check us out at wickedstocks.com. You get a 5-day free trial up front. You also get weekly Apple stock, daily Triple Q, daily SPY, weekly S&P 500, weekly NASDAQ 100 analysis, and 2 stock picks every week. You can see that all by going to wickedstocks.com.